market has come out of the lows and started rallying higher and higher. Gary Glover's been looking for this sort of movement, and he did cite a couple of weeks ago. It's possible that the market could power towards the end of the year and give us some of the best trading weeks of 2023 just ahead of us. And this week might show that it has been just one of those. Gary's been looking at the leading segments of the market. He's identified that gold and iron ore have been powering higher, but also there's opportunities in other segments, and that's in Gary's report today. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
I enjoyed reading your quick summary from yesterday's report saying that gold and oil had really been some of those leading themes, and then there were some opportunities or the strength and speed coming from healthcare and real estate or property had been something to really note. So it's only good to look at the shares that you've put in this week. What's standing out most to you in this week? Is it like a follow-through that you're looking for, or what are you thinking and looking for right now?
Yeah, I think, obviously we're trying to sort of identify the strongest themes there, which obviously we cover sort of Fridays there. And then obviously within the market, still sort of trying to, obviously the market pulls back. We want to be in the stronger names and stronger sectors as well. But it is interesting sort of to have a look at the broader market at times as well. So when you do have a pullback, because we've had a fairly decent pullback for all of global indices and obviously all of the Australian indices here as well. But when I look through all the sectors, we saw banking come back down the bottom of the range. We said healthcare being cream. We're seeing things like lithium has been big corrections as well. Just starting to see a few industrials sort of basing. Even when I look through the weaker sectors, so obviously healthcare and like a lot of the property trusts as well, just saw signs of kind of washout lows and a lot of those sectors there. So I thought, we've really got all of the sectors across the market all trying to find a low here all at the same time. And even the strongest stocks, they're all congesting here under the highs at the same time here. So I thought, this is, every now and again you get that sort of, confluence of signals where everything lines up together all at the same time there. So that's where you kind of get excited about market rallying here and really, really kicking on. So definitely saw that on the last week here, some decent sized moves, and just saw some of the weaker sectors sort of show some real strength, sort of really impulsive moves off the lows there, and some pretty good breadth in the market too off those lows as well, Chris. So just saw a lot of positive things all setting up simultaneously. Like in the market, normally you're sort of have some sectors are weak, some sectors are strong. So you avoid the weak ones and then stick with the strong ones there. And that's the case most of the time. But every now and again, you'll get the market to sort of line up together here. And there can be sort of quite powerful lows. So I just sort of saw that here in the last week or two here, all sort of setting up here simultaneously. So I thought, that's really interesting here that we've got, a large part of the market all setting up there. And the weaker sector is actually starting to show a little bit of something as well, all at the same time here. So just sort of boded well for like an end of year rally here, which sort of what we're sort of looking for. We haven't really had too many impulsive rallies here in the last sort of quarter or so. So just interesting, everything's lining up here at the same time. So I think it's really super interesting at the moment.
Nice. So that's a good overarching view on the market. If we look at the technical side of things, starting off with US indices like you normally do in your report, the NASDAQ, that's a massive bullish candle that's happened. Started the week in the lows, closed towards the highs. It's still within the ranges in that ABC formation that you were highlighting. So is there more work to be done before you really get bullish on it, or is this sort of what you were looking for?
Yeah, it's funny. Sort of, the market looked pretty dire there. Sort of, a fortnight ago, it looked like it was sort of rolling over and looking pretty negative. Maybe going a little deeper than we'd sort of, probably prefer to see, and probably seen historically these sort of same cycles. But now we've had a really impulsive bounce off that low, and then if we sort of step back a little bit with the market, we say, well, hold on, this is still just a bit of a sideways orientated correction here. Still sort of in an upward trend in the NASDAQ there. We've actually left some spacing between the previous swing high and the previous low as well. When you get bullish spacing in the trend, that's when usually see bullish spacing now, I'd say, 8.5, 9 times out of 10, you're going to basically go to a new high. So that looks pretty powerful there. Probably just want to break that little upper trend channel there. We've got a shorter term channel there and probably the larger one. But I think if we break that sort of second channel, this is off here. I actually think if it breaks that little swing high there in early October, that one there, I think if we break that, it's gone. I think that'll actually could keep rallying here. There's a bit of breadth to that move. So I think it looks pretty strong here to me. So the key there was obviously we've had a pretty strong week. You want to sort of see how this trades down. So we'll probably get 2 or 3 down days this week at some point. And you want to sort of monitor how they go down. So if we don't want to see any impulsive moves. We don't want to see any strong selling or any strong volume. So if we get maybe 2 or 3 days sort of on the side or a small down days and we don't see too much volume, then that'll be a good sign. That's exactly what we want to see here. So still a tiny bit early here, but some promising signs off that low there. Looks very encouraging to me.
Nice. So it's good movement for the NASDAQ. And is it the S&P500 echoing a similar sort of thing? You want to see swing highs broken, downward channel, you want to ideally see that broken. We're not seeing the same bullish spacing, but apart from that, is it?
Yeah, sort of come back to sort of, it's just on the previous high there. There's a bit of a zone there that touches around that level as well. So, but yeah, probably just not quite as strong as the NASDAQ, which is interesting. The Dow and the S&P are probably showing a little bit of weakness there to the NASDAQ, which in a high inflation environment should be the other way around. So the NASDAQ should be showing a little bit of weakness, and the Dow should be the more value oriented, should probably be the strongest here. But what that hints at is that inflation getting under control here. So let's hope the market's right. But yeah, it's still positive there, just probably coming a little bit deeper than you think. But again, kind of breaking above that little swing high there, 2 or 3 weeks ago, that'll be a positive sign for the S&P. And that's sort of, I like to still see those little B wave breaks there. Breaking out of that channel there will be pretty positive as well. There's no reason why we can't go back up to retest those highs there, Chris, as well. But I look at my bigger cycles there, really, looking at the sort of pre-election years and the third years, just, not many don't rally up until, sort of from October through to January. I'd say maybe 1 out of 10 doesn't rally. So yeah, it's a 90% sort of seasonality sort of trade here. So yeah, it would just be, if, I guess, that's no certainties in markets, as we know, only probabilities, but it's a strong probability there that we'll see a bit of a rally into year end. So, but we just need to sort of maybe break a couple of sweet highs here, break out of that range. And if it does that, then I think this is, a strong chance.
Off to the races.
Yeah, strong chance of running into early January. There's a little bit of an odd, I don't want to get ahead of myself here, but next year should be a tale of sort of 2 halves. The way I look at it from the cycle and stuff. So if we get the right setup there, there's some big opportunities next year as well. So let's hope we get the right setup here into January, and go from there. But I think we can break rather swing high here in the next week or two. That'll be a really positive sign there.
Okay, well, imagine that's similar sort of thing for the Aussie, but we're still trading well and truly below those highs, congesting under it. We have had that same sort of reversal out of the support region. You did talk about a couple of weeks ago, seeking out this low 67.60. Did we actually get there, or we got really close?
I got sort of marginally below, which is perfect. So basically, I think we cracked it by, I think less than 10 points tonight. So come back and retested that zone there. Actually came down there on the 90 calendar days from that sort of July high as well. So which is the perfect setup. I think we talked about, I look at a number of cycles there, but within the the GAN cycles can be sort of hit and miss, like the shorter ones. So like the 1 quarter and the 1.5 year sort of cycles, but I find that they work best in sideways orientated markets here. This is certainly one of those sideways orientated markets here. So I think it looks sort of bang on the money here, 13 weeks from that last pivot, come back down to the, so we're hitting key technical zones right on the, so price and time, sort of what we again would say squaring off at the same time. So those are good signals there. And we saw a really nice bounce here, some good volume too as well. So look, we've had a couple of bounces here on good volume that haven't followed through. So it doesn't give you 100%, sort of bases all the time, but it's some good signs there anyway. So I do think we'll see a bit of an end of the year rally here. It's interesting here, but I think the market looks pretty well poised. I just looked through all the sectors. I like what I saw across the board. So even like property trusts, which have been probably the worst sector, I bounced pretty hard last week. Healthcare's really had a pretty strong week here as well. So I think it was actually on Monday was probably the strongest sector there, which is interesting. So some good signs.
Well, then rounding out the indices, you've just got the Dow Jones, which look, it's so similar to the S&P 500 and the NASDAQ in the sense that coming off the lows, big strong candle, still within its range. So I'll be echoing the same thing here. You want to see a sort of swing high broken. There's a bit more overlap in the Dow, but anything major of a change for that or similar sort of outlook?
Yeah, similar to S&P, but like the NASDAQ's more of a sort of sideways sort of correction there. This is probably slightly deeper, so probably not quite, prefer, if I'm choosing one to trade here, then I want to trade the NASDAQ because it's showing relative strength versus the other indices. So you got to trade the strongest ones there. So, but yeah, I would have been thinking in this environment the Dow would have been the one that would have squared off and shown the relative strength, just because value typically outperforms growth in sort of high inflationary environments. But that inflation number is cooling off here. Fed's been unrelenting on interest rates. That's the one thing that half of Australia's economists don't get, is that you can choose to have maybe 18 months of a little bit of pain here on interest rates, or you could potentially have 3, 5 or 7 years of pain of high inflation. Having 7 years of inflation at 7.5% every year, that doesn't sound like great to me. I think Powell knows that. I think half of the economists in Australia should go back and read some of their textbooks and say they wouldn't be talking the dribble like they have been for the last few months about rate hikes here. So, a lot of people crying poor in Australia. I get it's not great. I've got a mortgage as well, like everyone else. But the reality is we are way under everyone else globally, Western world here. So everyone's sort of sitting at sort of 5.5%, where we're sitting in the low 4s here. So you can say, we've had too many rate hikes, but you know what? Everywhere around the world had a lot more than we have. And we're probably one of the more affluent, wealthy nations in the world. And we're a resource, orientated company, which was really great commodities period as well. Plenty of jobs around. Jobs numbers are still pretty low here. So, it doesn't make any sense to me having rates here. So I do expect a rate hike here. But I think, probably just go a little bit higher here for Australia, maybe 1 or 2. That's probably going to be enough. And then we wear a little bit of pain for 6 months or 9 months, however long it is, get inflation under control, then we can go back to normal conditions again. That's what Powell's sort of aiming for. Talking the talk, he's sort of delivering what he's been actioning there. We just got to be careful with inflation. It's just people underestimate. They obviously haven't read about inflation in the past there, because it can be pretty deadly. So probably the worst outcome, if we got 3, 5 or 7 years of high inflation, that's pretty nasty. That's the one thing we want to avoid here. So we'll take a little bit of a medicine occasionally. But yeah, I think, the market's looking right here. I think it's just going to be a tricky period. If you look at those inflationary periods of the past, they can be pretty choppy markets. They're not bad markets, just sort of you get sort of powerful moves up, powerful moves down here. So that's what often sort of lays ahead here. So end of the day, you're going to be long assets in high inflation environments, because, if you think about it logically, Chris, if it costs 7.5% more to build a house every year, the value isn't going to come down. So, a lot of people sort of calling for the demise of house prices and stuff here, but you think about
Placement costs going up, it doesn't help.
Yeah. I mean, your wages go up. I mean, the materials go up. If it costs you more every single year to build it, placement value, the values aren't going to come lower here. That's sort of Add immigration on top of that. I mean, I love. I seen Matt Barry. Got a really interesting sort of take on property sector being a bubble here, and he's been talking about it for a couple of years. He makes some really, really great points. But if you look at there's one study he hasn't looked at, and that's like there's for every person that arrives on this earth, for every two that arrive on this earth, there's only one departing at the moment. So the population growth is exploding around the world here. So it's 2 for 1. So the global, if you look at global population, it is just skyrocketing, all around the globe. And people complaining about immigration now. I get that, but the immigration keeps coming through here. There's that's going to put more sort of strain as well, which is the case here. And the wealthy people, they'll have 2 houses, Chris, as well. So and they're all going to pay the price of actually not having assets. So that's the problem with inflation is historically the asset rich get wealthier as those asset prices keep inflating. And those that are sort of not asset rich, the costs of sort of living go up every year, which makes it tougher to get ahead. So it really separates the rich and the poor, unfortunately, which is a tough part. But that's what history tells us. So that's the power of getting educated. So do your research, do your homework, and understand what's going on.
Well, that's critical overarching themes for both the market, the indices, and the cycles that you talk about, putting all of that and understanding history. That really leads us to the trading shares that you pick up on a weekly basis, and you've got a fair few in this week's report. At the top, and more recently, you also, in the last couple of weeks, you've said that there looks to be a bit of opportunity happening in the healthcare space. Ansell is one that you've picked up. You've got FB, so false break here. It's come down, undercut the lows, but only marginally. And then, as we can see, a big, strong candle off the bottom here. Is there any, what else are you looking at on this chart?
Yes, I mean, sort of history sort of tells us to be looking at sort of high quality industrials there. And sort of, if you're looking at sort of stocks with low PEs and sort of high yields there, that's sort of where the opportunities are, because you sort of want to get, if you're in this sort of high inflation environment, that you're going to get paid to own these sort of shares. So getting, so typically the high yielding value shares typically tend to do pretty well. But the best growth companies still do well, but the value is probably the safest sort of segment to be in there. So I noticed like Ansell is, like a lot of the stocks here have come back and retested the low here. So I think that PE is around probably 11, 12 times here. So it has compressed here. That yield's getting improved, even though it's sort of got cut recently. I think that'll normalize there, and it's a pretty reasonable yield here as well here. And all those retail stocks as well, Chris, are sort of all sort of in shame. But I think we've just seen here so many stocks come back and retest the lows there and then bounce there recently. We're sort of seeing we're going sort of high to low within the ranges. So when we see these sort of bigger names come back and retest the lows, make a false break here, I really like those type of trades here. I mean, for me personally, if I'm entering sort of near the low, I'm going to stop just under the low, and it's a very low risk. And if it goes all the way back up to the top of the range, that's a pretty good reward here. So, they don't always sort of get to the top and stuff there, but I think this looks pretty interesting to me. It's sort of, we've seen here the last probably 4 or 5 weeks, the volume's been pretty light here. So there's no aggressive sort of selling going on. It's just sort of meander back to the back of the low, which has been the case for a lot of stocks here. So this is just a general, this chart just epitomizes what's been going on in the market here, probably for the last 3 years.
So that's Ansell. If we look at Adair's different space, talking about the rate hike possibly this afternoon, Melbourne Cup Day, and the impacts it can have. We got FB once again, so false break, come down to these lows that we saw coming into June, July, a rally, drop back under stalls, and then where it is now, it's definitely under it. But a big strong candle reversal, taking out 2 weeks, obviously a fair few more.
Yeah.
What's the reading there?
Yeah, it's interesting. Obviously, I think we're probably likely to get a rate hike today, which is going to be negative, obviously, for retail stocks in general here. But if you look through the retail sector there, they're all showing a bit of strength here off the lows. And we saw like a few false breaks in the last few weeks there. And look, there's some value there. I think it is on a PE of under 7 here. So even though it sort of cut its dividend there for the last half here, we're still looking at sort of 5 to 8% yields as well here. So, there's definitely some value in this sector here. It's probably just not my sort of, favorite sector there, but there's definitely value there in there at the moment. And we're pricing a little bit. It sounds funny. It sort of sounds like, with interest rates going up here, we should not go near this sector here, but that's exactly what sort of happened off the last lows there. It was sort of pretty negative period there, I think, sort of mid-22. And we saw a pretty nice bounce there. So just price action is actually showing a little bit of strength there. I think it absorbs sort of today, maybe we get 25 basis points, you probably get a bit of weakness for a couple of days here. If it doesn't sell off too aggressively here, I think it'll still look pretty good here. But just seeing a bit of strength there in the retail sector, Chris, which has been pretty weak here, and is the obvious sort of it's obvious. It's almost too obvious there that it's a sector which is going to be affected the most here negatively. So, but I think the prices at the moment, the PEs are so low, the value is so low that they're pricing in that sort of suppression as well. So, sometimes you sort of when you get these hikes here, that can be the sort of buy the rumor, sell the fact, So, I think a lot of the negativity is sort of priced in here with the current sort of valuations for a lot of these retail stocks.
So the market's looking for one thing, it can quickly do the other thing because everyone's expecting and aligned for a certain outcome.
Yeah, we'll just see how it absorbs this here. But I'm expecting it to be a little bit of a negative for these guys. But I would surprise maybe they just pull back a little bit for a day or two, don't go too far, and then sort of build here, take it in stride here. That's what you want to see. But just interesting. The price action was pretty bullish last week for those stocks. Pretty good volume coming off the lows there. That's a pretty good setup there. Look, they get a hike here today. Maybe she's lives in the same shadows as of the previous guy who's just in denial, and maybe she won't hike. Maybe they'll pop it more aggressively. Who knows?
That will definitely be seen this afternoon. Transpires there. The ASX, you've got that in there. Odd one in the sense that trading volumes have been on the nose, a few other aspects happening, but it's coming into find you've got sort of the wedge showing here that it's coiling in the sense that there's less volatility, but it's still pretty much a one-way street, isn't it?
Yeah, there's obviously a downward sort of descending wedge there, but we have just sort of kicked up out of that range there. So it's first time here. So we do have quite a few touches along that range as well. So sometimes we only have maybe, a couple of touches there, or it's a bit narrow there. It's sort of hard to say, but we've had a lot of touches of that trend line there. So pretty significant. You've seen big volumes here, constant volumes here for that last sort of last drive here. Some big volumes through there. So so that's possible signs of accumulation taking place here as well. So I still think the ASX is potential, takeover target as well. A few other exchanges have made bids in the past here. So I think you just don't sort of see a lot of these sort of multiples all the time. They'll get sort of some of the softness there, but there's definitely some value here, and potential sort of corporate opportunity as well here, and the price action is just sort of showing a little strength here at the moment. So again, just some of our weaker sort of stocks, weaker sectors here, are just starting to sort of break out here.
Well, the next one in the port is AX1 Accent Group. A bit more of volatility in the last 12 months, coming from the October lows that we see back here, sort of $1.10, and it's towards north of 260. That big strong drive, drop back off. And then now what's coming to being a wedge that you've highlighted here. That's really low volatility for the company like this, isn't it?
Yeah. So look, it had a nice, had a pretty deep pullback there into that low there, but didn't have a nice bounce there. And then what I like here is that sort of, I think I had what's that, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks there, and it stayed pretty tight in that little sort of that little wedge. So really didn't sort of come back there. So it's probably only come back half of that range there, sort of from what 150 up to 220. So it's held pretty nice there. Just kicked up out of that little range there last week. Some pretty good volume came in as well. So that's a good sign here. So I think, look, you might see a little bit of a pullback here, but I get the feeling here that this is probably one of the strongest sort of retail stocks, in my opinion there. So any pullback into the range here, maybe next day or two, there could be opportunity as well. But I just think it looks sort of positive there at the moment here. So if we can hold up pretty well the next couple of days, I think it'll be a good sign there. But it just sort of showing a bit of strength here. The weaker sectors here are showing a bit of strength in our market currently.
Well, another one, Charter Hall, you're talking about weaker sectors. This has just been terrible story looking at that for the calendar year.
I reckon this is the weakest sector by far. So it's just important to have a look at them as well. So obviously we know healthcare's been pretty weak here, but mate, the property trusts, no one's talking about them, but they have been absolutely caned here and absolutely destroyed here. Some big percentage moves there. But when I look at sort of history, sort of says, you get a big first leg down there, you might get a bit of a bounce. You'll get another leg down there. They usually sort of, like your ABC, so A equals C. So normally, so you're measuring out sort of the first leg to project down. That sort of gives you a bit of a target there. So once we've sort of hit that, gone beyond there, we think, okay, now we're getting into sort of low territory of where you can establish a low. So just thought it was interesting there that we saw a bit of a pretty strong impulsive bounce there last week. First sort of real sign of anything from quite a while. So that's interesting there that, the weakest sector by far is showing a little bit of something there, big, bullish engulfing pattern there, sort of at a, pretty strong measured move as well. So that's a fair decline there. So what's that, 540 down to $3 there? So 240. So it's a pretty big pullback there. I just know, like, a lot of these property trusts, I've had a few insiders are saying that they're trading like 30 to 40% below book value at the moment, and saying that obviously they're probably discounted based on how they're valued in the past. Whereas I think now the auditing, the compliance around this is a lot different than say than when the last property trust sort of, like a lot of them sort of got into some serious trouble and they were leveraged up and things like that. So I think they're probably better well managed. They're a bit more scrutiny there and a bit more well audited there. So I think, there's definitely some value there. Again, it's not my preferred sector, Chris. I'll make that clear. I think there's safer places to be. I'd like to be in the stronger sort of stocks, but just interesting here. We're seeing the weakest sector show a little bit of something here. Sort of sides of the bottom there. So these could be all really deep lows for a lot of these sort of sectors as well. So healthcare, property trust there could be coming up these deep lows. We talked about Dectus a few weeks ago. Talked about that sort of Wyckoff sort of, that big sort of, the accumulation sort of schematic there. So basically, like, Wyckoff sort of got two accumulation charts, two distribution charts, but they're basically macro sort of charts as to how sort of trends develop and then how bases establish themselves. And so this is sort of a classic sort of, I think this is sort of classic schematic number one. Now you have that big washout, you base out for a while, and then you either make it higher, low, and then go, or you make it, you have that one last sort of washout and then recover here. So, this to me looks like it, when it was breaking down, I thought, okay, this is like the final washout leg here. So, they're really looking for a spring here. So looking for a final clean out and then spring here. So, like, last week we almost got like a bullish engulfing pattern, a really strong bounce there. Definitely the biggest rally for the year for that stock here. So, pretty interesting there. So we'll see what follows through here. But again, not my preferred sector here, but interesting here that we've got, this is a sort of classic sort of bottoming sort of pattern here as well. So if we can recover and get back above that 740 zone there, that'll be pretty positive for the overall sector there.
So that's Dexus. If we go have a look at Clinuvel, which is back into the healthcare space that you've been signaling about for some time, it's just been a really big downward move, trolling out of the bottom, impulse gap, leads to a rally, and then it's been pulling back within that channel that you've highlighted here. In the last couple of days, just finally popped above it, and the volume's been on the downtrend, but there's a bit of a flick up in the last couple, in comparison to last week. So you're looking for a similar reversal setup here?
It was funny, sort of like coming out of that October 22 low. This was one of the stocks that were showing strength at the time. So we're sort of, we're showing a lot of stocks that are showing weakness now. So these aren't the strongest stocks here, but when the October 22 low was coming in, this stock was already was basically, I think, had made like 3 or 4 higher lows. So it was actually showing relative strength there. I think that sort of stock, made a low around $13, $14 there, but rallied up to $29. So that's what we mean when we talk about identifying the sort of strongest stocks. So when the market's at a low, we want to buy those stronger names here. But yeah, so just interesting here that was the case back then, but obviously times have changed here. It's obviously had a bit of a pullback there. Probably a bit surprising to me because I think it's actually reported pretty well managed sort of biotech too, been profitable for about 5 years there. So it doesn't need to raise money, which is me probably the biggest fear of owning a biotech is that they're going to tap the shareholders for more coin. So this one's not going to, I don't think it's going to do that there. I think, actually they've got like 200 million. I think they've earmarked 100 million there. I don't know why they don't do a buyback, to be honest, but they've got plenty of cash here. But interesting, this one is so low here, considering it's actually reported pretty good numbers. But I did notice the last pullback were really super light volume on the pullback, and now we've sort of got a first high and low here. So it is kind of, for me, one of those sort of higher delta sort of stocks. So when it does move, it really can motor. A bit like an Elders and stuff there, when it's trending, it really trends. So when this one starts to move, it can really move here. So just notice it looks like it's sort of broken out of a little bit of a channel there. And, that could be the first high and low here. So just interesting sort of price all set up here.
With Jumbo Interactive's, the next one on the report, it's got higher lows. Definitely what you've mapped out here. You've talked about it once or twice before.
Yeah.
You've got a bit of a confluence here. So downtrend sort of that now became support, and then the support coming off these lows. Confluence where it's crossing over. So how do you trade that kind of movement?
Yeah, it's probably a bit higher quality business than CFV, and it's been reporting pretty well. Pretty simple business, this one. Pretty good margins as well, this business. So I just think it's a bit of a cash machine here. So interesting that it's actually shown a bit of weakness there, but has come back to retest that sort of big sort of isosceles sort of triangle there. But yeah, just hitting a bit of a key zone off the lows there. So I really do like this sort of company. Very surprised it's down here, but yeah, I think it's at a critical sort of support zone here. So I think if you sort of see this sort of turn up here, start to show a little bit of strength there, there's definitely one worth following here, because I think this one's got the potential to outperform here, as much as it hasn't been one of the stocks showing that relative strength that we look for. It's not too far away from the high here, really. But yeah, definitely do like this one here. They just need to show a little bit more off the lows there, but pretty encouraging here. This last week here, I do quite like it here, actually.
Well, Macquarie is a large name, very big one. You've talked about the banks, talking about the PEs. Macquarie fits into a different group, even though they have banking. So much more of their revenue is made up of other areas of their business and the revenue streams. What do you see happening here? It's kind of massive kind of wedge that was, or down overhead resistance that was sitting under, and then it's sort of dropped out the bottom of this support. So it's maybe a bit far for a false break, or going for a false breakdown at these levels? Yeah,
two things there. Obviously, it's sort of, it's had a pretty decent down move there, but it's used up a lot of time for us as well. So that's really, that's a long time here. That's, sort of that last leg here, it's probably been almost a full year here, and it's been a sideways orientated sort of pullback as well. So not really impulsive at all. So again, that sort of sideways nature, which you're sort of seeing there, some high inflation environments as well, sort of one to keep an eye on there. So I think we're back to P around 13, 14 times, like the yields around 4.7, 4.8%, might have even got down close to 5 here below here. So yeah, you don't sort of, Macquarie's always sort of viewed as a bit more growth than the big four here. So you don't get a chance to sort of buy it on the same multiples that you buy the other four on. Always. So yeah, a bit of value here. Just love the fact that it sort of did give a market update, which probably wasn't that flash there, but probably, again, it's like, if you've sort of had that decline, you sort of sell into the news, and then, the softening news comes out, and then away you go there. So, I do think actually it's bounced pretty nicely off that low. It's been pretty decent volume the last few weeks, so sort of signs of accumulation there. So I think it's sort of sub 160. This looks pretty interesting to me. So, yeah, definitely get a bit of value there as well. So, what is a pretty strong growth company normally, but look, I know it's not perfect growth environment here, but yeah, I still think this is sort of like an A-grade stock here, and you're getting it at a pretty cheap price here, cheap multiple here. So, and you get a bit of yield here. So, in these sort of environments, here, the high inflation environments, if you're sort of buying quality and getting a bit of yield there, that's the that's the ideal sort of scenario there historically.
Well, the last one on the list is still a blue chip, still a large company, has been a very strong growth company in the past. Back in the healthcare space, but it's Ramsay Healthcare, and just looking at that chart, it's still showing big downward movements, almost half, not quite, but close. What do you see here, Gary?
Yeah, two things there. Obviously, we've seen that washout low there, so pretty decent volume to all that washout, pretty deep. And we've had a little bit of a bounce there, and now we've sort of contracted back here. What I like here is on that sort of contraction there, we saw the volume dry up as well. So definitely a lot of volumes through that period. And now we've had like an outside, bullish engulfing pattern there last week. Looks like a first sort of high-low sort of setup there. Volumes were slightly improved as well. This is often how they can build here. So, look, this one, it might take a little while to build here, but starting to see signs of, washout low there. You want to sort of see a first high-low build here. So, very constructive price action for me. And yeah, it's a good sign for for the whole sector there. I think, CSL's had a nice bounce there. Just quite a few of those, ResMed's had a nice bounce. So quite a few of the healthcare stocks are bigger names. We're all sort of starting to bounce edge over with something all at the same time here. So that's pretty good for the overall market as well.
That's very good. If we do see even the worst performing companies, which you've highlighted here in the sectors, stabilize. So even if they just hold,
I've got a lot of charts in there this week, Chris. So I probably could have put in 3 times as many.
Wow.
Because I honestly was sort of like, I was, that's why I was like, was A, and B, C. Jesus, like, it looks like I haven't gone through the rest of the charts there. But there was so many charts I go through there. So I probably could have put 30 in this weekend, which looked pretty interesting. Whereas 2 weeks ago, everything looked pretty horrific. So it's funny that I sort of knew that a couple of weeks ago when things looked their worst. That's when you sort of, if you've got sit out power there, you can do that. And then all of a sudden, that you're pretty close to an important turn here. So it feels like we've actually sort of turned here last week. Pretty impulsive rally for a lot of stocks off the lows there. Lots of, bullish engulfing patterns, lots of false breaks, just lots of really constructive technical price action there. Just need to sort of see how we take this, possible rate like in today. We absorbed that well. I think if we hold this week pretty nicely, I think that'll be a really good sign for the rest of the year. So just important that this week we don't see any impulsive selling or any sort of any reaction selling. But if we don't see that by the end of the week here, I think it'll very promising for the rest of the year.
Nice. Well, that's a very good wrap and summary for it. So we'll look at that for this afternoon, the rate rise, the charts that you put forward here for the week ahead. And we'll look forward to your update both on Friday and next Tuesday. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.